one of the major selling points of Bitcoin is the idea that you can self-custody money and then you can bring it, anywhere in the world with an internet connection,
Mhm.
which
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin and gold. Lyn Alden says, adding random data to the Bitcoin blockchain has existed since the start. It has taken on several shapes over the years. For example, it has gone through phases of being popular, disappearing, and then resurfacing in a different form. I do believe that another way to conceptualize Bitcoin is that it's the most decentralized and unchangeable database that functions more like a real-time chain than a proof-of-stake network. It is essentially similar to digital time due to the usage of small nodes and proof of work. The capsule is quite intriguing and quite difficult to break. It can withstand even quite a bit of abuse. Storingen im gesamten Netzwerk items of such nature. Thus, I believe it seems reasonable that there are a number of items you could wish to include. Someone posted a photo of, the well-known image of the man in front of the tank in China, right? Thus, perhaps there are historical events you would want not to document, or perhaps there are important novels you would like to include, such as 1984. You would like to include the United States Constitution, as well as other relevant papers. Pertinent in the future, that you wish to ensure that you are aware of the possibility that it will be difficult to obtain your examine untouched copies first and state. You can't prove that this is true. We can prove that it hasn't changed. Years pass if you leave it in there, so you can even add items for different purposes like, say, merely applications code, for example. If you like to maintain a specific kind of code, demonstrate your knowledge of Michael Saylor, or apply the concept not only can a million AIs create their own keys, but you could also enter your public key into the Bitcoin blockchain and claim that it is you. However, not all of them are able to do so. Forward with that, at least not quickly. There's a reason for it. There are small or moderate costs involved, etc. In terms of ordinal theory especially, I do believe that the Bitcoin blockchain is helpful in that regard for non-transaction data. This is rather different from simply inserting inscriptions that indicate ownership, though. Basically, it's a method of sorting Satoshis ranking the network's smallest component. I don't particularly like the speculative fervor that this has shown, and I think this is a little bit spammy. But I believe that Mabel will experience more waves in the future, but I also believe that there is a human need to collect, which includes digital collectibles, and that can work for a while if there is enough agreement on what ownership is. But I personally don't think that's a very fascinating approach. However, I do see the Bitcoin network as a valuable means of verification. Thus, whether it's for decentralized identity, like DIDs, or whether it's similar to the Sailor example of utilizing it to attach a document key, or a key that is burned on one side of put your key into it, to demonstrate that it has a cost associated with it. That is something worth investigating, in my opinion, and it has been investigated before. I believe you are aware that there was a lot of discussion about it at the Bitcoin conference in Miami, even though there was a lot of action on both sides. Resemble the real-world use case that you just described, so we'll watch how this develops and perhaps observe a decline in comeback. One positive aspect of this is that the miners are profiting from it, which is good given the state of the network. And lots of things Lyn Alden discuss, so please watch the video to end and share, subscribe our channel, Everyday Finance. Thanks.
so I like both gold and Bitcoin as part of a diversified portfolio. Kind of the framing that I use for a diversified portfolio at the current time is a three-pillar portfolio. So one pillar is cash equivalents of various types. That can include things like T-bills, money markets. Um, Another pillar is long-term compounding equities. So equities you're happy to hold for 5+ years. They could be dividend payers. They could be kind of profitable long-term growth stocks at reasonable valuations. That's kind of historically a very attractive place for long-term compounding. And then the third pillar would be basically commodity exposures or hard monies, which is more of an inflation hedge. So that can include things like energy companies, copper miners, direct
Mhm.
commodity exposure, like holding a uranium trust or something like that. But then also would include assets like Bitcoin and gold. that are, protections against ongoing currency debasement, potentially superior monetary systems that are gaining adoption over time. And so, when we look at, let's say, like $45,000 price targets, if you look at Bitcoin's price action historically, it's very correlated with liquidity. And
Mm-hmm.
there's various ways to measure liquidity, but essentially, for example, if you look at global broad money supply and then denominate it in dollars, and you look at that in year-over-year terms, that's very correlated with Bitcoin. So when that's going up, usually Bitcoin is having one of its big bull markets. And obviously, there's two big drivers of global dollar-denominated M2 broad money, which is either you get a big expansion of money supply itself, or you get a weaker dollar because that's the unit of account that you're measuring all these in. So if you get a stronger dollar and you get ongoing quantitative tightening, that's generally rough for Bitcoin. And if you look
Yeah.
at this big kind of mini bull run we've had, where Bitcoin came off its lows, nearly
Mm-hmm.
doubled. Um, the dollar peaked back in the autumn, the dollar index. And because we've had the Treasury general account pouring money back into the system and offsetting the Fed, that coincided with somewhat of a bear market, or at least a cyclical bear market in the dollar, which has given a bid to assets like, Bitcoin, gold, things like that. And so I think the next, say, 6 months, next 12 months are really going to highly depend on liquidity dynamics, which again will come down to a handful of people. But if you ask me what I think Bitcoin looks like in 2 or 3 years, and probably gold as well, I think that's a clearer picture. And in that time frame, I'm certainly a bull. So I think in that regard, Bitcoin has less geopolitical risk. If anything, it's kind of insurance against certain geopolitical risks. So one of the major selling points of Bitcoin is the idea that you can self-custody money and then you can bring it anywhere in the world with an internet connection,
Mm-hmm.
which as an American doesn't seem super important on its surface. But if you live in Lebanon, if you live in Argentina, if you live in China, if you live in India, if you all these different Nigeria,
Yep.
the billions of people in the world that are in either smaller countries, more inflationary countries, more authoritarian countries, any just time they might want to, for whatever reason, bring their assets around. It's Bitcoin is the least friction asset to be able to bring with you. Other ones can get blocked by all sorts of capital controls and frictions and confiscations and things like that. So I think that's actually a point in its favor. Number two is that it doesn't have profits. It's a network, right? So there's tail risks on the network, like the United States going hard on it. There are these certain challenges that it can face, and it probably will face to some degree in the years ahead. Um, but for example, if you were to have some of these tail risks, like China and the United States have their relationships break down, these companies with very big installed asset bases in China,
Mm-hmm.
like Apple or Tesla,
Right.
things like that, I'd be more worried about those assets because they're at a pretty high valuation. They have this tail risk that could be their operations, like, just absolutely massive damage. Whereas the Bitcoin network is more nimble, more decentralized, not reliant on profits. So if you do get that kind of war or that kind of breakdown scenario, I think Bitcoin would be volatile. And I think the biggest risks kind of against it are, say, US or European capital controls, them viewing it as a threat. But I think as part of a portfolio, I think it actually has a different risk profile than you get with some of these other growth stocks, even though itself is a growth technology.